Hello, everyone. This is David Leary, the co-host of the Cloud Accounting Podcast. I hope you enjoyed this preview episode of the recently launched Accounting Salon Conversations podcast. You can subscribe to the Accounting Salon Conversations podcast in your favorite podcast app, hitting any of the links in the show notes, or by heading over to accountingpodcastnetwork.com. And now for the show.
Hey, Ryan, welcome to the Accounting Salon Conversations podcast. I'm so happy to have you on.
Amanda, hello. Happy to be here.
So when David and I were talking about starting this podcast around the accounting salon, we knew that we wanted it to be really casual and fun. And so I thought, who is more casual and fun than Ryan Watson?
Oh, boy. We've really set the bar high now. Okay. It's going to be 5 minutes and really boring.
So welcome. Welcome.
Yeah, no, it should be fun.
Well, I hope. We'll see, I guess. This episode of Accounting Salon Conversations is sponsored by our launch partner, Rippling. Rippling is more than payroll, and now that most employees are working remotely, your clients need more than just payroll. They need payroll, HR, and IT all working together in an all-in-one, modern, flexible system. By using Rippling, when you add a new employee to payroll, you're simultaneously enrolling them in benefits, instantly setting up their email, and even sending them a computer preloaded with all the software and apps they need to do their job. Imagine how impressed your clients will be when this takes only 90 seconds. Right now, I'm sure most of you are doing just payroll, but with Rippling, you'll be able to expand the advisory work you're offering your clients. Rippling offers accountants free payroll and HR for their firms, a client dashboard, dedicated accountant support, and white glove migrations from other just payroll systems. To learn how you can evolve your client advisory services beyond bookkeeping and just payroll, head over to accountingsalonconversations.promo/rippling. That's accountingsalonconversations.promo/RIPPLING. Rippling, everything your clients need. So you and I have known each other for a while. I was thinking about this. I mean, we're on like 7 years, I think, that I've known you.
Yeah, I think that's right. Well, we were talking a little bit before the episode, and I guess we met at the very first, the inaugural US Xero Con in San Francisco, which I actually was trying to figure out what year that was. And
2013.
Okay, I was going to guess 2013. You know, it's funny. The most memorable piece of that, though, and I guess the backstory for anybody, you know, we each had our practices. I don't really know much about what yours was like at the time, but I will tell you ours was very small. It was just myself and my partner. I don't think either of us were full-time on the firm. I remember talking to you, and we, you know, like lots of people in this space, don't know anything about tax. And you were our tax expert that we knew we needed but hadn't found. And I remember the most memorable part was after we got home, you sent us these like really cool bow ties from some New Orleans
Right.
boutique. And I still have that bow tie to this day. I will tell you that I have never worn it, but I have packed it to wear on at least 4 occasions. And every time I get to where I'm going, I'm like, oh shit, I don't know how to tie this thing. And then I don't put it on, but I've tried.
That's funny. For anyone listening out here, I want to be very clear that I am no longer doing tax work. I am not a tax expert.
But in the day, that was your thing. Or maybe it wasn't your thing, and that was just what we sort of described to you. I don't know.
No, it was because I had just started my practice. So,
Okay.
you know, that was the days of like, if it comes in the door, I'll do it.
Sure. Oh, we know those days. Were you a tax person? Because you were at some public firm before that, right?
Yes, I was at Deloitte. I mean,
Oh, that's right. Yeah, we were both.
yeah, and I was in tax.
You were in tax. Okay.
I was, and I have a master's degree in taxation.
So I don't understand. There's so many people in this like Xero world that don't do tax because we're all audit people or some other version, and you're one of the few that actually have a tax background, and you're still not doing it.
Correct.
Is that just because you just don't like it?
Well, this is what happened is I did it for like the first 3 years of the practice, but I realized that, I mean, you know, tax season isn't till April 15. It's like till October 15. So basically 10 months of the year I was doing stuff. It's not that I hated it, but it was keeping me away from doing the stuff that I knew I was going to love. The controllership stuff, the technology stuff. And so I walked away from it. And I mean, and that was kind of scary because that was steady work. It was good money.
Well, I wonder, and not to take us down a rabbit hole that we can never get out of, but we think about tax sometimes at our firm, and even to this day, we have varying degrees of an Amanda Aguilar, relationship where we have other firms. Ideally speaking, our clients will come to us for CFO advisory, and they'll already have some sort of tax relationship. But 40 or 50% of the time they don't, and so we've got to help resolve that for them. And we work with other firms locally and nationally. Again, varying degrees of success. Some firms partner incredibly well, others not so well. And, ultimately we own the daily relationship. And so we take a bit of the responsibility when it doesn't go well. And so that's a long-winded way of saying we often think about, okay, we should just start a mini practice, a tax practice, or at least hire a specialist. But the biggest reason that we've never done that, and this is coming around to a question for you and your experience, but the biggest reason we've never done that is because there's such a mismatch in terms of volume. We've got, let's say, 100 clients that pay us between $1,500 and $5,000 a month. If I was able to service every one of those clients, I'd only ever be able to charge them, I don't know, $5,000. It's not enough to build a practice, right? I'd have to go out and get a bunch of tax-only clients. You just make so much more from your recurring clients that it's never enough to sustain a once-a-year tax relationship.
Yeah, I agree because, and I started off so small. I did have a couple of folks that would come in and do, bottom level preparation.
Mm-hmm.
At some point we were doing, I would say 100 returns, which is pretty good for, for a sole practice. But I had to touch every one of those returns on the back end. And it was just totally not worth my time. But to your point, to go find somebody who was qualified enough to review and to sign off on returns.
Yeah, exactly. You got to have enough. And so we've kicked around, all right, well, should we just buy a tax practice that has like a seed of work for this person to do while they also support? And that's crazy. And so anyways, we just keep resolving to focus on what we're good at and what we do and try as best we can to partner with others and, go work when it works.
But isn't it interesting how the pendulum comes back, where the traditional firms still, a lot of them are heavy compliance and they're trying to move towards advisory monthly accounting services. But you and our friend Kenji they in the last couple of years added a tax department.
Yep.
It's funny that it's coming back to that. We're so far ahead that we're almost coming full circle.
Well, I think in part some of us are doing the thing, it's a combination of doing the things that we want to do and describing ourselves the way we want to be seen, which are these advisors who can help solve business challenges and meet your growth goals and all sorts of things, CFO level stuff. And certainly that's valuable to our clients and they think of us that way. But they also are there are things they need. There's just blocking and tackling. In many ways, we're their accountants too. And so they need their accounting resolved, right? And so, they're going to come to us and ask for things like tax. And so it's hard not to be a one-stop shop.
I was talking to a firm owner early this week, and we're having the same conversation. How do we get to more advisory out of clients? But his point to me was, my business clients don't see that there's a defining line between monthly accounting and bookkeeping,
sure,
sales tax returns, running payroll, income tax returns. To them, that's all dollars. It's all money. And that's what we should be doing. So I think the difference, though, in what the kind of firms that you and I have, I guess, is the mindset shift about it. That it's not commodity, it's not hourly based. It's more about being a holistic advisor, and maybe that does need to include some compliance.
It just depends. I will say the thing that we have grown like a lot of firms who started from scratch and deliver advisory services have grown, I imagine, which is we started back in 2013 when we were with you and Xero Con doing commodity bookkeeping, like outsourced monthly bookkeeping. I think our very first, actually, that's not true. I know our very first client, we charged $49 a month and we threw in the Xero subscription for you. They were a friend, of course. It was like, I need to have a client. So I'll do it. Right. Yeah. Right. And this, by the way, was the goat cheese client, which so you'll remember. But So anyways, and our second client was like $99 a month. And like, we were all over the place. But all that to say, like, we sort of continue to move up market and try to distance ourselves from commodity, just financial statement prep, into more advisory forward-looking analysis. And I would say every year our average MRR has ticked up a little bit to whereas now it's a little bit over 1,500. And so every year, this conversation is less and less relevant. So for clients who come in the door and want a $4,000 to $5,000, relationship, they're not thinking of us as a person who can do their taxes because they have a, multifaceted solution, right? They have their CFO. They probably have an internal admin or bookkeeper. They certainly have a CPA who does their taxes. They might have, they have a wealth manager. I mean, they've just got a lot of folks, and they're more accustomed to, the realization that like they have outgrown the one size fits all model. And so they're looking for specialists. So again, every year the conversation gets less relevant, but for our smaller clients who are looking for a one size fits all, it was a real sticking point. All that to say, so the moral of that conversation, I think, is we keep thinking about doing a tax practice, but we probably never will.
Yeah, right. That was 9.5 minutes of therapy. So you're welcome. So I know that you had a big 2020.
Yeah. So, I assume the respect you're talking about is with regard to a new child.
Yes.
And yes, so my wife and I had our second. He's now 5 weeks today. His name's Joe. So he's so our older Jack is 3.5 and Joe is 4 weeks. So we're trying to get some sleep here and there. We just bought out of like all of our friends have recommended we get the snoo. I don't know if you're familiar with this.
No, Ryan, my kids are 16 and 17. There's so much new shit now that like I was like, what is? Do you even call this parenting anymore with all these gadgets?
Yeah. It is one step below night nurse, I think. But it's like a smart bassinet that like will rock your kid to sleep. Yeah, it's crazy. Like it has like 4 levels of audio and motion, and it'll soothe your child ideally back to sleep. And if it gets to, if it runs through all 4 levels, it'll send you a push notification that says, we're shutting down. You need to go get your kid, basically.
Wow.
It's awesome. And so that has helped somewhat in the night. I mean, on some level, babies just wake up a lot. But
yeah, so it's really keeping him asleep longer than he normally would be asleep.
Well, who knows? We didn't run like a test and control, but it is. He's sleeping more than our first slept, who did not have this new benefit. So we're going to keep it. That's basically where we're at. That's cool. But it works. So that was obviously a big. And then I otherwise like things professionally it's a good year. I have lots of things going at once, right? And I usually try to keep my life compartmentalized for whatever reason. So when I'm talking about my practice, I don't talk about other things. But all that to say, like in addition to the practice that so Upsourced Accounting, I'm a partner in that practice, and it had an awesome year. We opened a Dayton office, and we keep adding people, and we're having fun. The growth was good, but I think for the most part, like our success is measured by we want to be a place where accountants can go and retire, which is like not really true of a lot of accounting firms, right? We both worked at Deloitte. That's not the model at all. And I absolutely want this to be a place where somebody can come join in the mailroom, so to speak, and retire a partner. And so we had no voluntary turnover and added 2 people in the last year. So I'd say I marked that as a success. In addition to the firm, I was working with a startup called Ahology. I was the COO there, and we sold that company. I left in April, and so now I'm working on something new. So it's been a crazy year, but it's been good. How was your 2020?
Good. I like everyone. It did not go at all like I thought it was going to. A year ago, when you start to look ahead to 2020, you're like, oh, maybe this will happen and maybe this will happen. And none of those things happened. But some other exciting things did happen that I couldn't have foreseen. So as you know, I got a book deal to write a book on Xero.
How's that going, by the way?
It is actually, I just yesterday got the final proofs. It's all laid out. And as soon as I click the button, I think it goes to print.
Nice.
Yeah. So it'll be out in April. So it's all.
How would I buy it in April?
Well, you can pre-order it now on Amazon, right? If you'd like.
You can. Okay. But how do I get a signed copy?
I will send you a signed copy.
Okay. There we go. I'll buy it too, just so you get the.
I'm going to need some 5-star reviews on Amazon. So even
okay.
if you don't open it, I need you to buy it.
You'll understand if I read the book first. I'm not just handing out 5-star reviews. My reputation is on the line here. I got to make sure.
Yeah, so that was cool. But that was a bit also like having a baby, because it took a really long time, and like before I saw any progress, any fruit from it. So I've written pretty much the entire summer, like 4.5 months. So the deal is with Wiley Publishing, a huge 200-year-old publishing company. And I had never written a book before. I'd written some pretty deep content, some pretty long articles, but never a 300-page book.
Sure. Very different.
I thought I could do it. So I get a call with this editor to pitch him the book, right? I was like, Xero is awesome. Nobody has really written a book for accountants and bookkeepers on Xero. And I really believe that, we're on the verge of tons of adoption, especially in the US, and I'm the right person to do this. So I'm, pitching him. And he's like, sounds great. Can you do it in 4 months? And I was like,
sure.
Like, I don't know what that even means. That would have been like telling me, can you swim in ketchup? I'd be like, I don't know, but I'm going to do it.
Fascinating. So you did it. And I guess I have multiple questions, not to flip the interviewee relationship here, but my first question was like, okay, why did you want to write a book? I'm assuming that it's because of Elephant and your branding. Like you're trying to continue down the path of Xero expert, hire me to teach you how to use it kind of a thing.
Yeah, I mean, that's part of it, but I just have all this stuff in my head about Xero that I did not feel like was available to the masses.
Yep.
You know this because you've used it for so many years too. It's like, okay, well, there's a certain workflow process that works better than others. There are weird things around integrations, especially, and like how data moves through Xero that's something you can't get on the Xero website.
Yeah.
That kind of stuff. So it was really like an effort to push every button, open every screen, and figure out the best way to use it. So not just here's how you do, you code a transaction, but like what's the best process at month end for getting all this stuff done. So
yeah, that makes sense. Learning the platform, how to hit the buttons or whatever is one thing, and there's plenty of content on that. But how to like actually run an efficient business using the platform, that's the thing that nobody's teaching you, and the thing that so many of these firms get wrong. So I get it. That's awesome. Okay, so I have another question. And I realize that, in full disclosure, and among all the things that you do, you're a person who does lots of things also. You are still a Xero ambassador, right?
I am.
So I'm caveating that because I'm going to ask you a question about Xero, and, you're a Xero ambassador. I'm curious about, like, what's your take on the Xero landscape? Here's my perspective. We started our firm in 2013. We were Xero only. Xero was the pioneer. I mean, it was brilliant. Their marketing was amazing. It was like, we are going to be the client advisory platform, right? You can build your business on Xero. And they did this awesome job of creating a community of like-minded people who also wanted to help clients in advisory-oriented ways. And so Xero was like the go-to. Not only that, the platform was just so much better. Like it was SaaS first, just blew QuickBooks out of the water. We, like many people, were Xero and Xero only. And there was an awful lot of momentum. Xero entered the US, just exploded, hiring lots of people, going into different places. And then, like lots of companies, ran into the 600-pound gorilla, or however many pounds the gorilla is, that is Intuit. And QuickBooks, they met the challenge. The platform is now way better. And so firms like ours, felt like we started to hit more friction by being Xero only. And we made the decision 2 years ago to support both. And I'll tell you, in full disclosure, almost every one of our new clients is on QuickBooks because that's what they are. And it was no longer a competitive advantage for us to force them to switch. And so we just said, right, great, we can support both. And now we're actually more QuickBooks than we are Xero. So that's a long-winded way of saying, how do you see this whole evolution, and where is Xero in sort of the enthusiasm cycle, and where does it go next? I don't know, where are we?
Clearly, I think I really do think about this a lot because...
Of course you do, right? Yes.
Yeah, I do. I mean, I have 3 businesses that are heavily vetted in Xero because I believe in it. I'll explain, I guess, my thought process on that. And I still do. I mean, clearly I wouldn't have written a book.
And I do too, by the way, not to say like all my personal, like our personal business, any other business I run, it's all on Xero. Like I prefer Xero.
Yeah. Yeah. To your point, in 2013, when Xero came to the US, I guess maybe it came in actually 2012, but when we went to that first Xero Con, like it was a different deal than what you and I were used to in traditional accounting firms and going to conferences. I mean, I remember distinctly walking into that gallery space. I mean, it was a conference, y'all, of like 250 people. It wasn't that many people.
Yeah.
And walking in my professional dress, by the way, because that's what we do for accounting conferences, right?
Totally. Yeah. And
walking in the front door, and this gentleman shakes my hand, is like, "Welcome to Xero Con. I'm Rod Drury." Like he was standing right there, yeah, in jeans and a t-shirt and sneakers. And so like there was always, back then for sure, there was a different vibe.
It was cool. Like, I mean, it was really hard. It made accountants feel cool in a way that wasn't even like a thing.
I mean, they had like food trucks outside, and I was like, what?
Yeah.
Like fake grass. Like it was very cool. And I mean, Xero is still has that vibe, I believe.
I agree.
Your point back then, feature for feature, Xero was 1,000 times better than
account manager at Xero.
Yeah. 1,000
before
times better.
Dorothy.
And
I mean, I think it was like
QBO
him and
Intuit feeling the pressure from Xero over the last,
Spencer, but he has since gone on to
years,
a variety
probably
of different things, and now he's
upped their game. I mean, it's a much better product now, probably because Xero came to the market.
We were catching up. All that to say, I was, thinking of all the account managers we had over time. I don't know who are Intuit account managers. I'm not even sure if we have one. I mean, I wouldn't be the person in our firm to have the relationship, but like with Xero, it is very different that you have a person who's not just like there to answer support things, but like they're very dedicated to the growth of your practice. QuickBooks for us is just software. I mean, it is 100% a means to an end. And I guess it turns out maybe that's good enough for them. I don't know. Certainly we're using it, right? And they don't need to invest any more in us, but it is a very distinctly different experience.
Yeah, like think about the people that you've met through Xero over the years, and like almost universally, I'd still go out and have a drink with those folks.
Well, again, I have not met anybody. I mean, certainly the folks from the salon who like are clearly more into the QuickBooks world, but I know them because of Salon. I granted, there is QuickBook Connect and, or QB Connect, and I've just never been. But yeah, of course, like it's a different, that's how I used to articulate it try to articulate it when I was a Xero ambassador or even before that. Like that is the biggest difference, is the community that Xero attracts and the type of mindset that a Xero firm has had versus a QuickBooks firm. And that's just to say that like there aren't plenty of like forward-thinking QuickBooks firms. The problem is there's just so many. It's like such a heterogeneous pool. I mean, there's just everything from like your very transactional bookkeeper to your large national firm to your forward-thinking advisor firm. And on Xero, there really isn't that spectrum. It's predominantly all a similar kind of mindset.
Well, what's interesting about that, what you just said, is that's kind of why I started Accounting Salon. Why I got David Leary involved is because I knew you, I knew Jake Himmelman, I knew Liz Mason, I knew Tate Henshaw, I knew all these folks with really progressive firms in the Xero world, truly some of the smartest people I know. And I was like, certainly this must exist on the QBO side too. Like there must be smart people.
Yeah.
I just don't know them.
And turns out it does. But I suspect it was probably a little harder to find. In part because the community is just so much bigger. Like it isn't a lightning rod of a community, right? Like it's a piece of software. I think people just, Xero became a movement. It became a lifestyle. It became an identity in a way that most software is unable to accomplish. And Intuit was one of those, right? It wasn't anybody's identity.
Yeah, it's funny because like when we had that very first accounting salon at my house, you weren't able to come, but
my picture was there though. I was there in spirit.
Your picture was there and you were there in spirit. When we had the very first one at my house, it was funny because like all the Xero people, so it's probably that first year, I think it was probably 50-50 Xero people and QBO people, plus sweet Rachel Fish as our token Sage person. Back then she was at Sage. So anyway, but 50-50 Xero and QBO, and like all the Xero people, we were tight, man. Like we knew each other, we knew each other's kids, but like there were QBO folks that kind of knew each other from a distance, but had never met in real life, kind of a cult.
It's very interesting. So I guess that's a good segue. So like what I guess is, It's funny, and maybe I was like naive in my thinking about this, but I remember in 2013 and 14 when we were, a new to Xero and we were Xero only, it was our belief that Xero was this sort of heir apparent to being the predominant, advisor or bookkeeping software in the US. Like it would do in the US what it had done abroad. We were riding that wave, fast forwarding now, I think it's probably, maybe Xero would disagree with me, but I'll say that that's probably not likely to be true. I don't think Xero is going to unseat the market share of QuickBooks. And so then I guess the question is like, I don't know, where does Xero go from here? Is it look, it's a giant market and most people are still on Excel anyways. So There's no reason for it to be winner take all. It's just preference, use this, don't use this, whatever, be one of the several or specialize in something specific. I don't know. What do you think?
Well, I mean, I know David and Blake have talked about this in their podcast, that something like, less than a quarter of businesses have fully adopted cloud.
Right.
That might be a dated and frankly completely wrong statistic, but I'm just going to roll with it, that there's still a lot of market out there for everyone. And I think this COVID thing only works in the favor of true cloud-based companies.
Yep, I agree. I have spent some time with the Onpay folks, and which I really like those guys a lot, and I like their product. And obviously, one of my questions to them was like, "All right, so Gusto is this thing out there that like all of the firms that I spend a lot of time with, including our own, we use, right? So, like, what's the strategy to compete with Gusto?" And their point is pretty much the same, which is like, look, you've got the ADPs and the Paycors and the traditional firms throwing off like significant amounts of exhaust every year via attrition on their clients. We don't need to beat Gusto. Like even if we pick up 10% of those clients, we're a giant business. And I think bookkeeping is the same way. There's just so many, I don't know, what is it, 20 million or some odd small businesses in the country. You don't have to have, it's not winner take all. You don't have to have everyone.
So I am working on a project with like a consulting project for some accounting firms, right? Mm-hmm. And we were talking about document storage, actually. And I was like, okay, well, tell me, it's a group of accounting practice owners.
Yep.
Tell me, which of these platforms are you using, or do you think other folks in this group are using? Is it Box, Dropbox, Drive, OneDrive? And they're like, well, there are a lot of folks are using servers. I was like, what? Like internal servers. Like it never crossed my mind that should be an option on the checklist, right? And to your point, there's still a lot of analog business going on out there. I think one thing COVID has done is made folks at some level have to adopt technology, because like if you want to visit with anyone, you have to use Zoom. If you want to have groceries delivered to your house, you have to do that on an app. And I think that forced technology adoption from last year is going to make it much easier for us as advisors to be like, look, it's all the internet. You got this. It's not as hard as you think. Give up the servers.
Yep, totally. Though, I mean, again, I will tell you that what's funny about this conversation, this like, hey, the internet's a thing and it's all the same, is that we were having this conversation back in 2013 at the very first Xero Con. I really felt like at the time our biggest worry was, how fast traditional firms would catch up. We had this like novel idea to service clients in this way. We're like, oh my God, we got to get out there, right? We're in a race. Yeah, I think full circle realization is that like first of all, the market is just giant. Like there's no winner take all here. Like you're not really hardly competing with any of these people, right? It's just, there's enough for everybody. And two, man, change happens just like 1,000 times slower than you expect it to. It's just, we're going to be talking about this 5 years from now. Like, hey, people are still on servers. There's this thing called Dropbox. I mean, it takes a long time.
You guys are like, we got to hurry up and get a logo and cards and a website because everybody's right behind us.
I know. It turns out like we are all just crawling along. And, I think that like in part that was, it was that sort of naive thinking that made us do some dumb things early on. Like we would, I feel like a lot of firm owners feel this way, but you feel like where you're sort of out of control, right? Where like you don't have good processes for this, and you're probably working more out. Everybody's kind of working more hours than they need to because things are just a little out of control because you're bringing in a lot of business, and it's just you're working too hard to get it done. And we were in that phase for probably like 5 years. And then we just kept telling ourselves, like, you know what? We just have this like thing we have to get, once we get through October, we'll have some time in November and then we can like really get our shit together. And then of course, November would come or October would come and we would be in some other thing. It was just one of those, like the important but not urgent would just sort of like continue to kick down the road. And we let it because we felt like we were sprinting, right? We felt like we were in a race. And then we realized like, wait a minute, we're not in a race. Nobody's catching us. Like we need to just like slow down. It's okay if we don't onboard the, number of new client goal this month because sustainability is just a million times more important. And I will say that if we think about 2020, that is one thing that we finally accomplished for the first time in the history of upsourced accounting is that we now finally have like a sustainable engine where we can bring in as many clients as we want to and we don't feel like we're working really hard. We feel like we know how to do this. We have it written down. We've done it a bunch of times. Yeah. And boy, that has made like all the difference in the world. It makes it actually kind of fun.
Yeah, totally. And I think we did the same thing, right? And that was definitely in the tax years. We're like, we don't have time to build this correctly. And it has still taken us years and years and years. And that's partially because I don't do much in the accounting firm side anymore. I'm doing much more with Elephant. So there are just chunks of time where I'm like, we are going to fix this one thing or document this one thing.
This is happening.
Yeah. And do it. But it hasn't been a consistent effort. I think we're probably close to there too. But man, it feels good. Feels good.
Yeah. So I know, gosh, tell me about it. So what's your deal on the accounting firm, by the way? Do you have like a partner there or do you have other people or like, is it just kind of a smaller group of clients that have you stuck with for a while and it's, you're not actively trying to acquire more? Like, I don't know, I always wonder that, but I've never asked you about it.
All of those. So, well, except I don't have a partner.
Okay.
Yeah. So it's my practice. Aguilar Accounting is my practice. I have one basically full-time staff accountant who generally basically runs the practice, right? Like she does all the practice stuff. I would say maybe 25%, 20 to 25% of my time is allocated to the accounting firm. Our website, like most, has a like self-scheduling tool where you can get a consultation. I could talk to you. And so I get on these 15-minute Zoom calls and basically actively try to talk people out of hiring us.
Hiring you. Trust me, you can do this. Are you sure? Yeah.
Yeah. Right. I'm like, yeah, so unless a lead comes in fitting a very, very narrow, specific, industry specific, revenue specific processes, like we
are you law firms these days?
Yeah, half of our clients are law firms, and the other half are other professional services, marketing agencies or whatever. And we do have a couple of like legacy clients that we just held on to because they're local. They're out of our not like we would probably not take them again just because they're not in the industries we want to serve. But
yeah. We all have those.
I would say we're in the place of probably onboarding one client a month-ish.
Well, that's still, I mean, honestly, when you told me that you were trying to talk people out of hiring you, that's more than I expected. That's good. I mean, it's growing for sure. I mean, you're probably not churning a client a month.
No, we're not. Our clients stick around. So it's pretty good. But, and it's important to me to keep at least like one foot in the accounting firm ownership space because I mean, you and I have had this talk before, like all these firm coaches and consultants who've never successfully run an accounting practice.
Yeah, it's nauseating.
It's gross. It's so gross.
Yeah, it is. I mean, of course, I get why they do it. It's very profitable and good for them. I have all the respect in the world for any kind of entrepreneur as long as you're doing it legally, and even those folks. But it's not the way I would run a business. And in my life cycle with upsourced accounting, I've from the beginning, there's been times where I've been 100% devoted to the practice. There's been times where I've been 0% devoted to the practice. But I think as of like 3 or 4 years ago, I decided that I don't ever want to be 0% devoted to the practice again, because a lot of the things I do and touch have some sort of, they kind of have some connection back to, this world, and I don't want to lose it. I don't want to lose the perspective. And so I'd say I'm probably 50% of my time devoted today. And yeah, for all those reasons.
Yeah. It's a cool time to be an accountant. It's a cool time to be an accountant, because especially with having experience in software, because it all changes so often. And especially when you find your people on this, it gets so nerdy so fast. It is like exciting and good.
It really does. I don't know when this episode is going to go live, but because we're recording it before the new year, I'm guessing it'll be after the new year. So it'll probably be pretty close to after the new year. So do you have like resolutions, or do you have
for 2021?
Yeah.
Yeah, professionally or personally?
Well, I don't know. Whatever you want to share. I both.
Yeah. So, I'll start with the easy stuff, the professional stuff. Getting this book out the door would be great. So that'll be April. Hopefully a couple of people will buy it besides my mother.
I'm buying it. Everybody listening is going to buy it. Do we know what the price point on this thing is?
I want to say it's like in the $45 range-ish. If you look on Amazon, it's called Xero Colon, a comprehensive guide for accountants and bookkeepers.
Oh, okay. Got it.
So
Okay, well,
you can look it up and you can pre-order. But anyway, so getting the book out the door, building more self-paced content around Xero for Elephant. So we do, and we're really good at bespoke training, live training, but we are actively trying to building out some self-paced stuff in a portal so that folks can send their new staff to be trained or pick up Xero and learn it at their own pace. So we're doing that in a way that will be like a simulated environment.
Okay.
Yeah, it's going to be really cool.
Is Elephant as you think about all the things that you are involved in, is that like your 80 for 20? Is that where like if you're thinking of something in the shower, is it usually Elephant?
Yeah, because there's just such a need for tech training in the accounting space. And so Elephant does technology training and practice management training. We don't do tax training. We don't do audit training. But there's such a need for good content around there that's not pay to play, that's not sponsored, like that's really useful. So totally every day, as I'm walking or in the shower, I'm like, oh, we should build this thing. Yeah.
Are you primarily catering to just firms, or is there any element of this that looks like a sort of a quasi associate's degree, if you will, like a certification that I'm a person, I want to go be gainfully employed in this new world, I could rely on Elephant?
I mean, we've talked about it. We've talked about like a certificate for being like a bookkeeper or a virtual accountant. Yeah. But there are other folks that are doing it already, and probably maybe doing it well, maybe not doing it well, but doing it at scale. I don't know that I want to go head to head with them yet.
Yeah. Well, and yeah, that makes a lot of sense. I mean, I think I mostly think of it from the perspective that like when we think about, we have an accounting department and an advisory department, and our accounting department are predominantly bachelor's degree in accounting folks, but they wouldn't necessarily need to be. I mean, it wouldn't need to be like a hard requirement, but ultimately somebody who like is comfortable with technology and is a good learner or whatever. And as those are not easy to find. Like it's difficult.
Oh God, no.
For our own firm. Again, we have an office in Dayton, Ohio. Dayton's like a Rust Belt sort of not developing, but hopefully, Midwest town. And, we often think like, boy, it'd be great to be able to like be a meaningful employer in this town. And not only that, but also like provide professional careers for folks who otherwise, wouldn't have that option, and be able to come and like almost as an apprentice join Upsourced Accounting and become an accountant in a way that would like allow you to grow, and you wouldn't be hindered by your lack of a degree. Certainly not at our company, because not unlike the code schools or the and so I just wondered if you ever thought that from it's hard for us because we're just one firm, right? So, to do the kind of velocity where we could make a dent and Dayton employment would be, several to many years down the road. But you obviously are in a different position.
I do think about this a lot. So as you know, I started my practice out of a divorce
Uh-huh.
with children, right? So like that's kind of where I started thinking about a virtual practice or being cloud enabled. Is like, I've got these two little kids, back then they were little. I've got to be available and I want to do this. I've got a master's degree and I'm a CPA, but also I need flexibility. And so, I think often about trying to create something at scale to empower single parents to have really good career options, but also flexibility. So yeah, I think about bigger stuff.
Yeah, it makes sense. And and that's kind of what you're doing, right? Like you're focusing on the folks, like in your world, helping them looks like you're a person who wants to be a solopreneur, right? Like, or maybe not always solopreneur, but you want to be an entrepreneur. You want to build a practice, and Elephant is one of the ways you can help get that practice out of the ground. Okay. All right, cool. 2021. What else?
Oh gosh. Okay. Yeah. So let's talk about non-accounting stuff.
Okay.
The reasons that, we have these virtual practices so we can have a life too.
Sure. Yeah.
So you know what 2020 did for me? It made me kind of a backpacking addict.
Ooh, I have seen this on Instagram. I have been piecing it together.
Yeah. So I've always been romanced by the idea of hiking somewhere, meaning like, get your ass dropped off in one spot. You got to make it somewhere else and you got to survive along the way. Like it's always been interesting to me. I like being self-reliant and feeling strong, right? So I did my first backpacking section of the Appalachian Trail.
Okay.
Over the summer, and it was freaking awesome. It was so great. And so I did another section in October, and like, that's what I'm hoping my 2021 looks like, is more of that.
More backpacking. I love it.
More backpacking. Yeah. How about you? What does 2021 have for you?
Oh, yeah, that's a good question. It's funny. I asked the question. I thought, you're probably going to ask it back to me. I should have like an answer for this. But I'm not as organized about that. I'd say, personally, obviously, I just want my young children to exit this pandemic healthy, so we can go back to spending time vacationing and doing things like that again. I have always like many people who own businesses, I'm a phone addict, so I have this perennial resolution to break my phone addiction and be more present with my kids in the evening. And that'll probably last me through February. I don't know. I cannot get a good routine to do that. A thing that I am also trying to do, and I have had more success at least so far, is just being more positive. I just am it's really easy to just be a negative person. Here's an idea, oh, that's dumb, and here's why that won't work. Or this person is an asshole, and here's why. And I think that's always been the way in which I've been funny. My humor was always being negative in a funny way. And I don't know, it's a little toxic, and I'm pretty ready to be done with it. And so I'm trying so hard to just have a completely positive take on all things and all people, even if I don't necessarily agree with them.
That's really self-aware to come up with that, Ryan.
Yeah, well, it's funny. It's taken some time. It's related to this project I'm working on. It's a startup that's, I'm not going to go into the details, but it's basically a recommendation network where people can build their reputations by recommending one another. And I think that whole process of introspection and what drives people in their professional relationships made me realize gosh, I am this just reflexively negative person. I think it's a defense. I don't really know. But anyways, I'm done. I'm ready to be done with it. So
I don't see you at all as a negative person. I think, you and I have the same sort of snarky, satirical sense of humor.
It's snark. You're right. It totally is. I'm an optimistic person. I'm optimistic to a fault, frankly. Yeah, it's snark. But it's my if it's a thing I hear, my reaction is to be snarky, but snarking is me putting it down in a funny way, and people will laugh, and I'm yeah, that was good. But there's probably other ways to be funny too. So anyways, we're gonna see. And then professionally, we've got we are so obviously I have that other startup that I'm working on, and we've raised some money, and so obviously this is going to be a pretty big year for that. And then on the firm, we just went through a rebrand. We spent a bunch of money on a new logo and site and value proposition. Well, not really value proposition, articulating the value proposition. We're formally moving into, let's call it CFO services, which a lot of people, by most people's definitions, we've been doing CFO services for, 5 years or whatever it is, right? But we call it a controller package, where it's just a very defined repeatable set of deliverables that we do every month. Like we'll do your KPI dashboard and we'll do a forward-looking projections and we'll have a monthly meeting with you and help you understand how you did. CFO services to me looks a little more ad hoc. It looks like transaction services. It looks like finding capital, debt or equity. It looks like incentive comp. It looks like lots of things, and it's a little harder to build a repeatable model around. It's a little harder to price. It's a little harder to scope. It looks like most of our clients are, let's say 15 to 30 employees. Looks like 30 plus, right? But I think we are finally ready to sort of dip our toe into that water. I think we've built enough expertise in our specific niche to have a right to win there. So we are doing it, and that's like my project within the firm. So we'll see how that goes. I mean, again, we've taken like specific CFO engagements on that look like that are high dollar, but ad hoc, and have not been successful turning a profit. So it's certainly an endeavor, but that's our next thing.
Keep on keeping on. You'll figure it out one of these days, right?
Yeah, we'll have fun doing it. It's like, what's the worst that happens?
Well, when we got on, I wondered if we had enough to talk about for 20 minutes.
Oh, I think we could go 3 hours. I wouldn't do that to everybody listening, but I think we could if we wanted.
Yeah, maybe we'll do round 2. Or you'll come back and we'll talk about stuff. Well, it's awesome to catch up with you, and hopefully
you too.
I'll get to see you in person in 2021.
Fingers crossed.
If I could put one resolution, one goal out there, one wish, it would be to see all these dear friends in person. So that's it.
I think we can, but I don't know. We'll see. Fingers crossed.
Well, it's good to see you. Kiss those babies for me.
I will. And you're large babies.
Oh, I know. I know. They're bigger. Both of them are bigger than me.
I saw a picture from your Christmas recently. Yeah, they are.
Yeah, they're both way bigger than me.
Yeah.
I do have tall people. But you kiss those babies. I know it's hard right now, but I know it's hard with 2. Like 2 is exponentially harder than 1.
Sure. Turns out I had a lot of free time before this. I didn't realize. I used to think I didn't, but I did.
Yeah. When you go to 2, you're like, okay, can you just, don't wake the other one up in the middle of the night? That would be great. And
I've been sleeping in a tractor bed for the last 5 weeks.
I'll say this, Ryan, I've got my 2, and there is something very, very sweet in seeing them love each other and knowing, no matter what happens with you, they always have each other now, So
that is really cool. It feels more complete than it did before in that way. So yeah, it's neat.
Well, have a good one. Love you. I'll talk.
All right, cool. Take care.
See ya.